right? So a fake BOS for that person that's saying it's fake BOS will be something like this. It broke structure, but it wasn't a real break of structure, so price kept going down lower. The only thing is that they know it's a fake BOS after it happens, obviously. So a fake BOS or a real BOS to that person is just price breaking a high, but not actually respecting it and keep on going higher, but instead it just breaks and it drops down lower. So to them, this right here that broke is a fake BOS. Yeah, I'll check my DMs after the call. Regarding trading plan, do you first identify range then POI? Yeah, so we have to identify first, you have to identify where you're in the market, right? First identify your range and then you can identify your POI. So once you identify where you're at in the range, then identify your higher time frame POI, which can be the 1 hour to 4 hour. So if we have this here, is your range from here to here, then we can go to the 1 to the 4 hour and identify the closest POI to the liquidity, because we have to use the higher time frames, right? So now, why wouldn't we choose this wick up here? Right? So now we have to think in the logic of the institutions, right? If they're gonna make a stop hunt, the stop hunt or the run liquidity is gonna be quick and fast. So if this is the high, and that's the liquidity, and there are stops above this high, when they run this high, it has to be quick. So the closest thing is not this, but dropping down to the 1 hour, it will be the imbalance field price action. So this entire area here. So let's see if price taps that. All right, so I tapped it. So after we took out all these stops up here, now we're aiming for these stops down here. So once you find the range, you then identify the POI that goes to the liquidity.
Thank you, man. That make a lot of sense.
Oh, you're welcome. Can you show us some breakers and what's the definition of a breaker? Yeah, so a breaker is simply a order block that was not respected. So here's one. For example, this one is with the imbalance field price action. So this is an order block, right? When price broke above, let's say this high here, 3 confirmation, it should have respected and continue going. If that doesn't respect this order block that was not respected, turn into a breaker. Price will push away, it'll come back and tap it. So it's pretty much, support and resistance. If you know what that is, then that's pretty much what a breaker does. So let's see if I can find another example. Here's one. Order block that was not respected. Broke above, test, continue going. That didn't happen. Price broke straight through, came back, tested. So just like support and resistance, it's pretty much how the breaker works. Here's another one. Order block that was not respected, comes to a breaker. Simple as that. That's what a breaker is. How can I identify smart money trap? That is T1 and T2. SMT trap is just another fancy term that was just made up, the same as change of character. All those new ones that just came out. But that'll be T1 and T2. So when we have, let me just show you here actually. So when we have this break instruction, so we have a break, then we got a retracement right here. Then another break. This is a trap. Normally, this would be the trap right here. Because think about it. How many supposed SMC traders supply the main trade will go short here? Because they were taught that after a break of structure, right, you take the closest order block, which would be this one. Or they'll see it as, let's say, decisional and extreme. So they'll go for this one first. If it doesn't work out, then they'll wait for this one to up here. So this will be the trap. That's what they call it, which will be pretty much the first order block or point of interest. But it's simply T1, T2. Fair value gaps, I use them once they're filled. So they have to fill for me. The imbalance must get filled, or the fair value gap, as you know it as, must get filled. That's how I use them. I use them as entries. I use them as POI. It must get filled. Did I go through a hard time and through a hard period of life we didn't know what to do and keep going? Yeah, of course I did. All of us did. We're humans. You know, we all go through a hard time. We all do. We all do. And that's just part of life. You have to accept it. You know, like you're not just going through that hard time for no reason. You know, like we ask and let's say ask and pray for growth, right? But we don't want to take the pain. When you go to the gym, you work out, your muscles are sore, right? They hurt, it burns, you sweat. But that's because that needs to happen in order for your muscles to grow. So we ask for growth. We want to, you know, be better, smarter, and so on and so on. But we don't want to take in the pain. Embrace the pain. Love it. I mean, that's how you grow. We're humans. That's how we, you know, keep on learning and whatnot. How to pick lower time frame OBs from the higher time frame OBs. Yeah. So if you plan on taking a direct entry, which would be, hold on, let me get my tool. So if you plan on taking a direct entry, let's say from here, all right, from over here. So if you're planting a direct entry here, you have to ask yourself if it makes sense to even take it directly. But the way that we identify the lower time frame OB is we find the higher time frame POI first. Once we find the higher time frame POI, then we drop down time frames and we see what it lines up with. Okay, so here we have a unmitigated wick. Go to the 5 minute. Here we have a rejection block. Go to the 1 minute. Here we have a order block. So this will become our lower time frame OB. So all we're doing is lining up the higher time frame OB with the lower time frame OB. And this is how I take direct entries and how you guys will pretty much already learn how to take direct entries. This is what a direct entry looks like. Okay, now the hit rate for direct entries, let's say it's not that high. I recommend everyone getting started to first take confirmation entries, which would stand for CE. So we see people on the chat, not in the chat, but in the community saying CE. That is confirmation entry. Because your entry is completely irrelevant if you don't know the overall direction of bias. What's the whole point of you spending hours and hours trying to get a perfect entry if your bias is wrong? It's a waste of time. Practice on getting the right bias first. Don't worry about your entry. Your entry will come last. Okay, first is your bias, your stop loss, and then your targets, and then your entry pretty much, right? Because you need to know where you're going to put your stop loss. What's the logical place to put your stop loss? Where are your most logical targets? And then enter. So before you even think about an entry, you got to first know the overall direction of bias and everything else and where you're going to exit. It's important to exit, to know where to exit. So for example, here, we have an order block with an imbalance for price action. Let me just forward real quick. Yeah, so we have a 4-hour imbalance for price action. So we're just going to use this. This would have been a direct entry. You could have taken it like this, nothing wrong with this. And because the market is fractal, right? You don't have to go to the lower time frame like the 5 minute or 1 minute because the market's fractal. And we know there's an OB in here. So you could take it like this on the 1 hour time frame, which is a 10, or in this case, 11 pip stop loss. So that would depend if that's something that you'd like to take. But if we break it down, the small time frame, this lines up with this order block, which would be this one right here. This is the one that we would take. That would be a direct entry. As you will see, that would be a loss. And that's how I take my direct entries. It's easy to say in hindsight that we'll take this block, but that's in hindsight. In real life, this will be the one I'll take because the liquidity is being built just below this. But in hindsight, we can all say, oh yeah, for sure, we'll take this. But no, this would have been a direct entry right here. Right? And because I know this happens, most of my entries are in the 5 and 15 minute. Like, I put my sell limit and I just put my stop loss like this. And I go on with my life, and whatever happens. I put my targets and everything and then let it be. Because I know that if I'm taking a direct entry, it doesn't have a high hit rate. However, if I'm so focused on that, small order block on lower time frame, my hit rate won't be as good. However, if I do keep in mind the higher time frame POI, and I put my stop loss, let's say around 8, 9, 10 pips, I know there's a high chance that I'm gonna get tagged in and be in the trade and not get tagged out. But simple as that, you just line up the higher time frame blocks. So if we have a breaker here, what does the breaker line up with my lower time frame? Right? And if you don't see nothing clear, then we're just not going to use it. So in this case, there's nothing clear at all. Like there's literally nothing. There's nothing to say that we're going to use on the right side at all. So this is the POI. The breaker, I believe, is not even that big. Let me see. Yeah, the breaker is not even that big. So we can easily use the entire zone. So this would be most likely a direct entry like this. And now most of the volumes in the body. So now if you want to use the wick, that's the 19 pip stop loss. So you wouldn't take this directly. That's just common sense. Just wait for it to give you confirmation entry. But if you wanted the breaker and use the bodies where most of the volume is at, then it'll be around a nice 9 pip stop loss. And then your targets. Same thing here. We have a breaker. So there's a volume of the body. Oh, that's the wrong line. Most of the volumes is in the body, right? And it lines up with this rejection block, which also lines up with imbalance fill price action. So all we can do is just go down to lower time frame. What do we have? We have a order block. Drag it across to the 15 minute to be your entry. Stop loss. That one is 13 pip stop loss, so you can decide if you want to take it or not. And then there's your target. Look at the risk reward. Is it worth the trade? Yes or no? I don't use anything less than a 2 pip stop loss. So that's how we take direct entries, the higher time frame block, the lower time frame block. All right, let me keep reading the questions. I hope that answered your question, whoever asked that. Let me scroll back up. So I have a question down. How do you define range from 4 hour to 15 minute? So if you're in a 4 hour time frame like this, all right, and you're telling me how can I define the range from the 4 hour and the 15 minute? Well, I mean, you can't give me a specific time frame to define it from. So if there's a 4 hour range, let me find one that's already completed, which is this one. Yeah, that's already completed, but never came to premium. But this will be my 4 hour range right here. This one to this one. This is my 4 hour range. Now here in this 4 hour, we can see the strong high. but here we cannot see the week low or the QM. The opposite QM cannot be seen here on the 4 hour. But we know automatically that this low is weak. So now we're using the logic, or let's say the logical understanding of the range and why it works and what's the purpose behind it. All right, so I can automatically already assume that it's weak and it'll be my target, right? But if I want to confirm the QM, then I drop down a time frame or so, and then we try to identify the QM here on the 1 hour. So in the 1 hour, where's our actual break before price went to the upside, right? And we don't see anything clear on the 1 hour time frame, then that would lead us down to the 15-minute to give us a good view. Now, when you drop here, what's going to happen is it's going to allow you to enter the market early. So catch that retracement to the upside, which is the current move we currently did, before it drops down to the downside. And that's the whole point of us being able to see the QMs in the lower time frame, because we know that price is going to make a retracement at a certain level, and we know it's fractal, right? Then we can enter early, right? Once we get the confirmation that the price is about to make the reversal. And notice here, price never broke a high until here. So once this high broke, okay. Once this high broke, made a retracement, and notice it never broke this low over here. So that was a breaker structure. This now confirms the range. But now we went from the 4 hour to the 1 hour to the 15-minute. So now we dropped down many time frames. So like I mentioned, you're not going to always see a clear QM on both sides. You just have to understand that if that's a strong high, then you see it clear as day. The overall bias is bearish, then you know that weak low is going to get taken because it's weak. But let's say that you want to catch the retracement. Let's say price comes into a POI. Then because you know that's a strong high and you know where you're coming from, and you know that this is going to be simply a counter trend, then you can enter here early, right here. Let me use it like this. Then you can enter here early and take the trade from here, for example. And then you can exit in internal liquidity. So here we have a high. That's a nice area to get out. Here we have another high right here. Good information. Nice little area to get out somewhere here. Okay. Now, price doesn't always take out all internal liquidity, and it doesn't have to. So if your target was all the way, I don't know, let's say up here, then eventually you would have not get, your TP hit. It would have just dropped straight down here, take out break even. But if you entered here, you should have already paid yourself. So here would have been break even. Here's some internal liquidity, here's some high, but we want to at least try to exit around this area above the equilibrium, right? At least try to fully exit above this. So that would have been a logical point to exit. But also, what else do we have here? There's liquidity here that we can target. So we can pay ourselves something. It doesn't mean to fully exit. Would I personally fully exit here? No, I'll take some partials for sure. I'll pay myself something at least, minimum, somewhere here, and then let the rest go, and I will target this, right? In hindsight, we cannot say that it didn't go up there, but in the real market, that's what I would do. I would aim for this, at least this to get taken. I know there's a breaker here, so I'm aware of that. So if I'm aware of that, and I'm anticipating the internal liquidity to get taken, right? And that's what my trading plan says and my rules say, then I'm gonna stick to that. But I gotta be aware there is a breaker here. There's liquidity just below the breaker. So I'm aware and I know that price can take this out, retrace, tap in here, then go. And I shouldn't be surprised that can happen. So you have to make some logical decisions, okay? And in other words, just common sense. So that would be pretty much my target. Some partials here and then my target here. So in this case, I would have either got break even, or if for some reason I got all my position now, it would have been here. But for sure, pay myself here. Something. I mean, I'm up 9 hours, so I'll take something.
Hey, Brian.
Yeah.
So I got a question for the same price action. Do you mind if I ask?
Yeah.
You know what? Can I share my screen? I will be able to navigate through the chart quickly.
Okay, well, hold on. Let me just get through all these questions. There's a lot. We'll get to sharing your screen at the very end because there's a lot of questions here. So let me get to all this stuff first.
Okay.
Way too many people in here. Yeah, so pretty much just hold your question, just type it out and hold on to it. We'll get to it. How to use these strong lows, highs, and the higher time frames. We use it the same way that we use a lower time frame. On the same way. We approach everything the same way. We enter the same way, everything in the same way, right? So 4 hour, we have a strong low right here. We have a strong high right here. Break a structure. Break a structure. There's this one, see break a structure retracement. So this right here would be T1. So let me just show you. All right. So we have a break a structure, a retracement that took out the liquidity, came into a POI, came into the breaker, which lines up with this imbalance fill right there. That right here is on the 4 hour time frame. So a price broke structure, maybe retracement or broke structure once again, that would be T1 on the 4 hour time frame. All right, let's go over here. A price broke structure, made a retracement, broke structure once again, that's T1. T1 right there on the 4 hour time frame. So we treat it the same way, there's nothing different. All right, go over here. So here we have around liquidity, the bigger picture, we broke structure. Hold on, move this right here. Here, we broke structure here, right? So that's a strong high. That's the BOS. And you see this clear, obvious BOS because there's no beacon information here on the 4 hour time frame. That's your external range. And then inside will be considered internal. That'll be your internal range. In other words, your internal structure that you see here. This was news right there. So you would have regardless got taken out. That's why I don't trade high impact news because it will violate the ranges. That's something you have to be aware of. Right? It will take out the high and the low of the range. So I don't trade news like that. So external structure, and then you have your internal structure. After a BOS, a new range is made. You have to understand this. After a breaker structure, a new range is going to be created. And you have to be aware of that. So we approach everything the same way as the lower time frame. Can I get on mic? Yeah, you can get on mic.
Yeah, that was actually me from before.
Okay, gotcha.
So do I ask?
Yeah, if you want to ask, go ahead.
Okay. Wait. Gonna scroll down the chart. Somewhere around 29th of August. I'll go to the 1 hour time frame again. Okay. So price made a strong high over here and then made the low over here. So we got our point A and point B of the range.
Yeah.
And so, I mean, within this range, I was able to identify this swing high as our internal range liquidity. And price did play out just like I anticipated. The only thing was, now, the only thing that I was confused about was our POI. So obviously we'll be looking at something above our internal range liquidity and within the premium. So when I look at this range, I had two POIs. So first of all, this was the 4 hour breaker block, and then I could, and I mean, this was my POI that I was expecting for the price to go short from, but we can see that it went from over here, something like here.
Yeah.
Now, would you call this a breaker block or not? Because the whole idea behind a breaker block is that it's supposed to be a failed OB, right?
Yeah.
And when we talk about this candle actually broke the structure above. So would you call this a breaker block now or not?
Well, let's look at the higher time frame. So if this is the start of the move, if the price started here, because this didn't do nothing, so that's a start, that's the high. So this point made that new structure point high. Probably was supposed to respect this. This is supposed to be the next continuation leg higher. So if this fails, you can't see here, but what's in the wicks? There's an OB in the wicks. So we drop down to the 1 hour. You see OB, should be this right here. Now, I personally wouldn't actually have seen this in the real life market, but yes, that's where price came into. I would have actually went for this one because
I also went for the one above because I was confused between the two. And the only reason I did not take the low one was because of this reaction. You see how it tapped into this the swept internal range liquidity and broke structure above. That was the only reason that I was not sure to consider this as a breaker block or not.
Yeah, so that's why we stick with the higher time frames, because in the higher time frames, so for example, in the lower time frame, an order block may seem mitigated, but when you go to the higher time frame, the order block is not mitigated, right? And because the order block is a price level, it can tap multiple times and not just one time. That's the thing about OB. So if you go to the 4 hour, for example, here, right, you see it price come down, tapping into it and going, right? So for some people, that would be considered mitigated. And for other people, it wouldn't be considered mitigated, right? So my best tip of advice would be go to the higher time frame, see what's going on there. And if price already mitigated in a higher time frame, then it's already done for. Now, like I told you, I wouldn't have taken this because for me, it just didn't make sense to me. I would have personally chosen this one. That's the closest thing to the liquidity, and I would have taken that one right there. It was just so clear, so obvious, nice low, and just like you said, tap into this. You go down to the 1 hour, you see it tap into that. So for me, the next OB would have been this one right there. In hindsight, like I can tell you that, yeah, sure, we'll take that one for sure. But no, in reality, this is the one that I would have chosen. That's the one that I would have picked, right? So, I mean, you having the right POI, in this case, which was this one, the only thing is I just never reached there. But now that we know why price came into here and pushed away, then there's your answer. But yeah, I mean, this is considered a breaker. And because the price level, the order block can be tapped multiple times. So in this case, it looks like it's already mitigated and price broke structure. So for me, what did I see clearly? This one right here. That right there. Because if I sit here and I say, well, if this already tapped, this OB right here, then this should not be a breaker, right? It should potentially, just keep on going. But if price tapped, let's say broke structure tapped and went up higher, and the broke structure here supposedly, and then price broke back down, then I'll be anticipating this to be my breaker and not this.
Yeah, exactly.
So
That was also my narrative.
Yeah, exactly. For me, the most obvious thing is this one. So for me, like, I don't want to complicate it, because if, let's say tomorrow I take a trade and then I'm expecting the same thing to happen. So I'm expecting this to get respected. And next thing you know, the market does this, then it drops. So now I'm confused which one works or why didn't it work? Why not this and why not that? So like in hindsight, if you see it in hindsight, good. But in reality, if you didn't see this, then don't even pay attention. Just which is the one that you would take. That's the one I would take. That's the one that I saw. That's the one that makes more sense to me. And that would have been it. Now, here's where the react and adapt station comes in play. So we know that we took our liquidity, and after price takes our liquidity, price can just make the move now, because all they need is liquidity to make their next entire move. So one, they took a liquidity, and let's say it broke structure. Let's go down. Once they got liquidity and we broke structure here, now we got the confirmation that we can potentially expect now some downside movement, because now we have that Q information form after we took our liquidity, right? Now, by this time being, we will probably be expecting our price to come up here. So now this goes back to the management part. If you're still expecting price to come up here, that would be your POI, for example, right? And if you know that your internal liquidity target is here, right there, then you wouldn't be expecting it long. You were expecting a short. But let's say that you were expecting price to take out this. So let's say you took a short here, and then you took a long here. As you can see, you got a reaction. There's reaction. If that short goes, that's your target. So where will you target if you take that short? Here. Where, in other words, where will you exit? If you take this long, where will you exit? Here.
Internal range liquidity.
Yeah, exactly. So I mean, this will be your first exit, and then obviously your overall target that you were aiming for. So you need to know and understand where are you going to exit. Entries are good and important, yes, but you have to know your bias and you have to know where you're going to exit before you even put an entry in, for example. So if I take a short here, I'm exit here or here, let's say. It depends. Or I want to take partials here and exit here. That's just personal. Like whether you got a small account, a funded account, that's up to you. But we know that we can take profit at the end of every range. So I can take my money right here. I can take my money here, here, and here, because that's the end of that range. Here, here, here. Those are my potential targets. And that's also a low right there, which lines up with this external range point right here. And then that'll be that. And that'll come into just the management part and pretty much reacting and adapting to the market. And then the market show you its hand. So, and these are real life scenarios. So that's why I'm not trying to tell you guys that we would definitely choose this right here. No. If we miss,
I understand, man. Because
Yeah.
something similar to this happened on Friday as well. So if you go to Friday's price action on GU itself, go to the one. This is the 1 hour time frame, right? Right.
Yeah.
So on the 4 hour time frame, this entire thing was a 4 hour order block, a bullish candle.
Yeah, boss.
Yeah, that candle.
But
Exactly.
even better, this one was clear.
Wait, what?
So what?
Sorry. Go to the 1 hour time frame now. So just like you said, so on the higher time frame, when it's an order block, we will always find a breakup block on the lower time frame. So this was a breakup block.
Yeah.
Right now, this is where I got puzzled in the market. So I saw this strong high, and obviously I saw this weak low. But within this range, I also saw this strong high being formed on the lower time frame, on the 15-minute time frame.
Yeah.
So now I was confused whether to take this range or should I take this range.
Well, what's your external and then what's your internal?
Yeah, so my internal range liquidity was, so first of all, I was confused in the range. So that is why my internal range liquidity for me was this Asian high. And I was expecting some shorts from here also because it was lining up with the breaker block.
Yeah. Yeah. So you go to the 4 hour, we have the let's draw the line. So we have the body of the candle right there, for example, right? But the liquidity is right here. That's the internal liquidity right there that we saw on the 15 to 1 hour time frame. So that's my internal liquidity. If I'm anticipating price to take this high out, the closest thing is literally the imbalance price action right here. Like that's it.
Yeah, that's the thing. That's the thing.
And then we have this.
Obviously, you're speaking from experience. But how do I know that is internal range liquidity? Because I was seeing a strong high on the lower time frame, on the 15-minute time frame.
Yeah, well, let's not say how would I know. But so now that when price, okay, so when price is over here, right? Because this is all hindsight. Let me go repeat tool. Where is my tool? Where'd it go? There you go. All right, so I get my replay tool. Okay, so before any of this happened, this is what we had here. Yeah, okay, and the call about to end literally in like a minute, right? I have a timer. Damn, time flies so fast. Let me see the question real quick because we have to do another call. Because I call our time, I'll put a timer on them. So
Yeah, we got a couple of questions.
yeah, okay, yeah. So let's go for another call. I'll send the link again. We'll leave off where we we'll take off from where we left off.
Sure.